Mining company Rio Tinto and its former boss Tom Albanese are facing fraud charges over a multi-billion-dollar African coal purchase that went wrong. It was a deal which ultimately cost Mr Albanese his job, but regulators in the US claim both he and the company hid the bad news from shareholders.
Tom Albanese nearly sent Rio Tinto to the wall with the disastrous purchase of aluminium maker Alcan just as the global financial crisis was approaching. In 2011, he doubled down, spending nearly $4 billion on coal mines in Mozambique. The US Securities and Exchange Commission says Tom Albanese and his then Chief Financial Officer Guy Elliott quickly discovered this too was a dud.
I think this is one of the most serious corporate misdemeanours that a large Australian corporation has ever been involved in.
According to the SEC, Mr Albanese and his CFO breached disclosure obligations by hiding from their board, auditor and investors the crucial fact that a multi-billion-dollar transaction was a failure. They tried to save their own careers at the expense of investors by hiding the truth. It's claimed Rio Tinto raised $3 billion from US investors after Mr Albanese and his CFO had been told the bad news.
The investors would have thought twice about buying Rio Tinto's debt in those circumstances if they had known about them.
Rio Tinto, Tom Albanese and Guy Elliott all say they're innocent. Rio Tinto has already paid nearly $60 million to settle a case brought by UK regulators over the same issue. And given that Rio is also listed on the Australian stock market, it's again raised questions over the perception that ASIC is reticent to take on the big end of town. Labor Senator Sam Dastyari was a member of a parliamentary committee which recommended ASIC be included in a royal commission into banks.
Once again, you see US regulators and UK regulators take the lead when the Australian regulators have failed to act.
The Securities and Exchange Commission is seeking what it calls the return of ill-gotten gains plus civil penalties, as American banks who ripped off shareholders in the GFC found out that can be billions of dollars. Andrew Robertson, ABC News.